We've talked in the past about the importance of naming beneficiaries for your assets, and that includes your IRA. But what happens when you don't name a person as the beneficiary for your IRA, but name your trust instead? To answer that, we're going to be the beneficiary of Mark Niederhellman's wisdom. Mark is a financial advisor with the Lineweaver Financial Group. Welcome again to the show.
Lori, thank you very much.
So why would somebody leave a trust as the beneficiary of their IRA instead of a person?
Typically, people leave their IRA to the trust for the benefits of somebody who can't be trusted with money. That could be a minor child, a spendthrift, or the spouse of a second marriage. And while there may be good reason for doing it, you have to be very careful how you do it. Trusts as beneficiaries of IRAs can be very complicated, and if not done properly, immediate income tax consequences could result.
So first, take us through how inheriting an IRA works. First, without a trust.
Okay. An IRA owner has the ability to name anybody they want to be the beneficiary of their retirement account. However, because Congress does not want retirement accounts, including IRAs, to continue indefinitely, after the IRA owner passes away, there are required minimum distributions, or RMDs, that require the accounts to be liquidated over time. Fortunately, though, Congress does allow these post-death RMDs to be drawn out slowly over the life expectancy of the beneficiary, at least where that beneficiary is what's called a designated beneficiary, or a human being that does have a life expectancy.
Okay, but a trust isn't a human being. So how do the RMDs work when the trust is the beneficiary?
Sometimes they don't work. Leaving a retirement account to a trust potentially loses the ability to stretch the distributions out after the death of the original owner. The good news is that Treasury regulations actually do allow trusts in certain circumstances to be treated as designated beneficiaries, eligible to stretch out those post-death RMDs over life expectancy by looking through the named trust to the underlying beneficiaries and using their life expectancies instead.
Okay, so what are the certain circumstances that you mentioned?
Basically, it means that you have to take the steps needed so that the trust can receive the IRA assets without creating a tax liability. The trick is for the trust to have proper IRA terms so the trust doesn't conflict with IRS regulations. It basically needs what's called see-through language. Without this very specific language, the IRA could be fully taxable at one time. Ouch.
Yes, that would not be good.
You've got that right. The see-through language lets the distributions flow through the trust to the beneficiaries, to be taxable to the beneficiaries, and to be distributed over the life expectancy of that individual beneficiary. If you're going to use a trust as a beneficiary for an IRA, oftentimes it's best to use separate trusts for each beneficiary. That can make things relatively simple. Each beneficiary can use their own age for the purposes of determining their required minimum distributions.
You know, after this discussion, it sounds like it'd be just simpler to leave the IRA to the person directly.
Oftentimes it is. If you're going to use a trust, you need to make sure that you're doing it simply for the protection of that person that could inherit the money. If there's not a need for that protection, you might be better off just leaving it simply to that person as an individual. Oftentimes the easiest solution is the best solution, and that solution might be skipping a trust altogether.
All right, always good information. If you decide to try to protect your heirs and your money by making your trust the beneficiary of your IRA, be careful. Follow Mark's tips to make sure you create the trust correctly, or you could make a costly mistake. To find out more, give Mark a call. His number's next.
For more information, call the Lineweaver Financial Group at 1-888-313-4009 or click to www.lineweaver.net.